So welcome here to the meeting, Ken. Great to see you, Kathy, both of you. If you want to unmute yourselves, feel free to do so. It's always great to be able to talk to you. But Mark, are you there? Can you, Mark?
I'm here.
Oh,
Can you
good,
guys hear me?
good. I can hear you just fine. Terry, are you still there?
Yeah, I'm here.
I am. I'm here.
Okay, great. So, what I'm trying to do tonight is these Mark and Terry, Mark Stein and Terry Lewis, started a company, and I'll let them speak for themselves, called Seller Financing Consultants a while back, and it's aimed at that niche of the market that is extraordinarily underserved in the context of Dodd-Frank. I don't know if we'll be it's successful in getting seller financing stricken from the whole Dodd-Frank thing or not, but until such time, there's a lot of people that are worried about having a licensed mortgage originator do their loans, especially when they're doing, consumer type loans, owner financing to owner occupants in residential properties. And so I kind of, it was funny a few months ago, someone said, "Do you know these guys?" And I go, "No, I never heard of them." And then when I was in San Diego, apparently I was sitting at the same table with them. So it was just sort of like well, just how I kind of go about, sort of ADD or something. But uh, subsequent to that, a guy from Washington, I think, contacted both their company and me about the same morning and said, "Hey, I've got 30 properties in Washington that I'm converting from lease options into to notes." And so I said, well, and he wanted a mortgage loan originator, and I didn't choose to get that licensing. Most of my paper and my consulting is done with people who don't really, it doesn't apply to them. They're just mom and pops. This is the only owner carry deal they ever do, or the only note they ever did, so it doesn't really apply to them. But so as far as I know, Mark and Terry, you guys are working with him on his 30 properties, right?
Yeah. So
Mm-hmm.
we
Yep,
connected, and
absolutely.
then and so we're attempting to get them switched over. There's a little bit of pushback because the people are happy in the lease option that they're in, and um, and so for him to convert them and be able to sell the notes is another challenge, and probably if he had thought it through, he probably would have rather just done the note and deed of trust and done it the first time so that he has the note.
Yeah, yeah. It was funny because I guess we're getting ahead of the cart here, but it's come up. So I mean, the funny thing about him was like, gosh, you know what? I can't help you with the LMO thing, but in terms of structuring these things for sale, because I still don't think, even if everyone agreed to just get on board, I still don't think he was going to sell the paper for nearly what he thinks, the way he's doing it. So that's interesting. A lot of his lease option people don't want to exercise yet, huh?
Well, I think I think they're Hispanic and mostly minority. Maybe second language is English, and I kind of think that they're afraid a little bit, and they feel comfortable not. And being in the lease option, I don't think is really should be comfortable more than owning your own home that's deeded to you.
Right.
So, I think there's a little they just don't understand the culture in America, maybe some of them, and
Or they're
that kind of
comfortable
stuff.
not
So
being on title, for instance, or something.
it could
uh,
be, and then when you do the Dodd-Frank ability to repay rule and all the stuff, and you're asking for pay stubs, and maybe they're working for cash and things like that.
right, right.
It's not something that they're really that interested in putting out there. So I understand both sides.
Yeah, well, that's really interesting. And this is the conversation that's evolving right here, right? So, I mean, this is a long way of going. This is how I came back around to talking with you guys. And do you either of you have Mark? Do you have? Should I give you the screen? Do you have a PowerPoint? Should I give you control of the screen, or should we just talk this way?
Y- Yeah, we didn't really prepare anything. We've always favored the interview format because it keeps the listeners engaged and involved, and they get to see the banter and dialogue back and forth.
Oh,
We've
okay.
done plenty of
I just
presentations,
want to
but
make sure.
it's kind of cool to talk to someone like you because no. We actually are excited to do this with you just because you share the same passion that we do, really with respect to creating a safer, smarter, better investment vehicle through the sale of a property and selling the real estate using seller financing. Obviously, our niche is different than yours in the fact that we work in the space that's regulated by Dodd-Frank, but certainly we share the same interest and enthusiasm with respect to using this overall strategy as a higher and better way to deal with real estate.
Yeah, definitely. Anyway, so you guys just got invited to be at Noteworthy, right?
Yes,
So tell
we
me
were. I was
about
at
that.
Noteworthy. Yeah. Well, it was interesting.
Yeah, I wasn't able to
Go
go
ahead.
my.
So I was on a panel that specifically we spoke about seller financing, and there was Jim Eckley was there, an attorney that I consider kind of a mentor of mine because he's one of the main attorneys in the note space that understands what's going on, and a few other that do seller financing in their own specific states. And so we spoke. What was unusual? Here's the big takeaway that I got at Noteworthy. Noteworthy is it's a it's a once a year kind of a convention where the note people all gather all together, and there's some other ones that have cropped up recently, but they've been around for 27 years or so. And what the takeaway was, Dodd-Frank was passed in January of 2010, and here we are about 7, 8, 9 months later, and people are starting to talk about, or the conversation was taking place in just about every breakout session. However, the understanding of it is so vague to people that it was beyond. It was really interesting because these are professionals that really should have this down because it's already law.
Yeah.
So that was my takeaway.
So it's like we're a little day late and dollar short kind of thing, but at least it's starting to happen.
Yeah, and you know what? If you stop and think about it, look at what happened with Obamacare. And that's kind of what this is, but for consumers in the financial arena.
Hmm.
You know, people they had to delay it and do all kinds of things because the deadlines hit and no one was prepared. And I think that's what this is as well.
Yeah, and so why don't we back up? And I just want people who are listening now, Ken and Kathy, and
Well,
a lot of people tune in later. These are archived, as you probably know, on my community site. But um, so how tell a little bit about yourselves, both of you, and then how you came to do this, where you're licensed to do business now, and what your vision going forward is.
Yeah, I'm Terry Lewis, and so I've been a licensed real estate broker since 1980 something, 81 or
Hmm.
two. Um, my wife and I owned a mortgage company in La Jolla for since '97. Uh, so when the crash hit, our business basically we were put out of business. I should say we were more in the jumbo market, high end loans, and around and then I started people started calling in desperation because they lost their job and they were losing their
Hmm.
homes, and so I started doing workouts and the banks weren't doing those, so then I started doing short sales and then I started reading the Dodd-Frank Act because in the 80s people about 30% of the business was seller financing where we were looking for first trustees that were at a low rate
Right.
because the interest rates were 14 to 16% for a 30-year fixed loan, and we were doing seconds and blending the rate for and it didn't. People didn't even care what house they bought. They wanted the rate because they didn't have to qualify for it, and you could wrap the mortgage, and so anyway, fast forward, I knew that this was going to come back into, history repeats itself.
Right.
But then I started reading Dodd-Frank, and I'm going, oh my God, the bank lobbyists tried to shut this down, and it wasn't even a problem.
Right. Right.
They caused all this.
I know. You know what? Just a quick thing. You know Rick Tom by chance, or the guy out of New Mexico?
No, I don't.
Well, anyway, he said that he's done the SaveSellerFinancing.org. I think he's put that together. Done a lot of
Yeah.
lobbying for protecting and seller financing,
Yes.
and he just asked the CFPB one time, okay, come on, let's.
They approached us.
Oh, did they? I'd like to hear, because what they said is they'd never had even one complaint about a seller finance deal. That's what he said. But did you hear anything different when they approached you?
Basically, they as a lobbyist, they're looking for money to try to lobby this law. But what the reality is this law, like Obamacare and like Homeland Security, it's never going to be changed. It's futile. It might be watered down a little bit, but I have a conspiracy theory if you want to hear it.
Yeah, I do. I love that stuff.
Okay. Well, the CFPB is an organization that's a cabinet level position that the head of the CFPB is one person, and he's appointed by the president for 5 years, not 4. And once he's appointed, he can't be fired. The CFPB is under the jurisdiction of the Treasury, and it's funded by the Treasury. So not even Congress can take away the funding or strong arm anybody in the CFPB to have things changed. And so it was created so that the legislature, the House and the Senate and the president can't get a hold of him and change laws or whatever. But what ends up happening is this is a rogue agency that has no one's watching over him. And so the conspiracy part of it is as a mortgage loan originator, I have to report quarterly every loan that not only an application that I take, but every loan that I fund, whether it's a Fannie Freddie loan, FHA, VA, second trust deed, HELOC, home or seller financing, and even the type of loan. It was the wraparound, was it an AITD? And so when you're doing this, you're putting, or when I'm doing this, onto the National Mortgage Registry. It's called the NMLS registry. When I'm doing this, it's going to have the borrower's name and the seller's name and all that. And I believe that it's a way that the IRS can come in behind and make sure that everyone's paying their taxes on their passive income from notes.
Oh, wow.
And I don't, and if that's the case, it'll never be repealed because it's a checks and balance on us.
Right.
So,
wow. Yeah,
is that a conspiracy
that's
or what?
a really warm and cozy thing to think about, because if I can think of anyone I'd rather get close to, it's the IRS. How about you?
Yeah.
I mean, that kind of big brother-ish, doesn't that just make you feel good, feel safe? Yeah, I don't know.
Yeah.
It's really interesting because there's usually such a bigger picture and forces working behind things that it's really not a transparent system at all. It's really hard to tell, what their ultimate objectives are, just like a lot of things. Talk about a rogue agency. How about the Federal Reserve to just begin with? I mean, seriously.
Right. Well,
Yep.
Exactly.
The whole monetary system is a coup d'etat. So, I mean, or a coup, I mean, they've just robbed. They're doing this whole crazy thing. So, in the context of everything, I guess our seller financing thing is kind of small, but to me, it's my whole world, and I think to you guys. So, but anyway, so Terry, you've been in the mortgage business a long time, and I think Mark has too. And then you go, hey, here's still something that we can build on what we've done by positioning ourselves as the experts on Dodd-Frank. And you've been working with Jim Eckley. Did I spell his name right over here?
Yes.
Eckley.
Eckley.
Okay, Jim Eckley,
Yes.
and
Yes.
you consider him like on the forefront of this whole conversation. Right when Dodd-Frank came at the end of last year, there's a ton of webinars going, with this guy, that guy, and the other guy, about 3, 4 people saying, here's the lowdown on Dodd-Frank. And but what does Jim do on a regular day in and day out basis? What is his like bread and butter life about? Is it this?
Mark?
Well,
Mark?
yeah, I think it's just to back up a step and get to that question after touching on this. It's interesting, this whole space that you work in, that we work in, and I'm reminded by something a friend's mom said when I was really young, and she always her advice was stop stepping over dollars to pick up pennies. And you see people out there that are call themselves investors, and a lot of the conversation is, well, what are the exemptions with Dodd-Frank? What are the exemptions? How do we get around it? Or in your case, in terms of brokering notes, well, how do I do it myself, not pay the broker fee? Or, even in real estate, how do I sell a house and, not pay a real estate commission?
Mm-hmm.
And the evidence, as is plain as day that when people do this, they end up costing themselves big money.
Right.
Well, it's the same thing here in this space of, there's so much talk of how do we get around Dodd-Frank.
Mm-hmm.
Why would you want to get around a federal law? If you're under its umbrella, and the amazing thing is the buyer pays the fees just like in any other loan transaction, and typically the fees are a lot less than a regular loan. So it's interesting to us that the conversation, we all of us have been given a pass on 2014. The CFPB hammer that Terry talked about has not been dropped, and in the next 90 days, when the new year comes about in 2015, just like the way you enforce any other legislation, you get a year, you get a 1 year pass, but within 90 days, the enforcement hammer is going to be dropping, and we're going to have, getting back to your question about attorneys, we're going to have attorneys coming after us. And these are attorneys that are going to be taking cases based on, it's not just the CFPB to worry about. It's attorneys that are, like these accident chasers that, it's basically, yeah. So, think about what that's going to be like when you get served if you're out of compliance. And, they'll be looking, just like the CFPB will be looking to make examples out of people. Attorneys will be looking to create case law, and the legions of attorneys that are going to be coming out of the woodwork, just like have been developing and mounting an army after the whole Obamacare. It's the same thing here. So, you're going to get nailed, whether by the federal government or a attorney on contingency.
Right.
So,
Yeah. So for
sense.
the people, so what you're saying is, hey, this is big stuff. Everyone's sort of waking up, coming out from under a rock, rubbing their eyes, but the time, until this stuff is going to get real is not too much more. And your supposition is anyone who should be, according to at least the safe harbor guidelines or whatever we're intending to do, compliant. Like there again, a lot of the people I work with have been excluded. They're doing one-offs.
Yeah.
But you're saying there's a lot of investors out there that are creating paper, and you're saying, hey, if you're going to do your owner finance deal, use and do the underwriting, have the buyer bring whatever it is, the 1,500 or 2,500 to closing to cover the underwriting, and make sure you have a Dodd compliant seller finance loan, because then number one, contingency fee lawyers won't have much to chew on. Number two, you'll have a note that's ostensibly, although we haven't seen that in the market yet, able to be more easily sold in the secondary market because it's been put together right from the get-go. Is that kind of where you guys are at?
Yeah,
That's the
and the last
presumption, yeah.
and the last piece you said are those are the magic words, and no one's really considered that.
Yeah, yeah. Not yet. It's just so overwhelming. Speaking of Obamacare, Dodd-Frank, there plus everything else that is so huge. Like I can't even imagine the country functioning under the oppression that's happening. So in the back of my mind,
It's not.
it's
It's
only time before there's some bigger. There's I don't know, or we're not going to be America anymore. I guess I don't know, but I just
well, Don, it's not functioning. If you look at the way the economy has performed since January of this year, if you look back in November, December, how all the prognosticators were saying, "Oh yeah, 2015 is going to be an increase in GDP, and
right.
you know, uh, housing's going to improve, and builders are, everyone's optimistic." And I said, "No, it's not. Dodd-Frank is going to pass, and you've got the ability to repay rule and the QM, which is qualified mortgage,
Hmm.
and all these things that are coming up, and basically it stalled after January. The whole real estate market with regards to new loans, and it's still it there's it's just kind of stalled. It's kind of just not. People aren't happy. But it's not like, oh, I'm going to go buy a house. It's the American dream. It's kind of like, oh, do I want to do this? No, and it's just not a good touchy feel.
No, I mean, and that may be what they kind of meant. All I know is that there's been a massive transfer of wealth. The banks loan you digits out of thin air, and then they take back your real property. I mean, I don't know. There, it's just the whole thing is
Yeah,
crazy
yeah.
anyway.
Well,
But I want to get back to before I go too far down the rabbit hole. Um, so basically, you guys have a niche. We're saying we're going to use our background. We spent hours poring over Dodd Frank, um, connecting with guys like Jim Eckley, and so you say, okay, so what states can you be the LMO for a seller finance deal? In what states are you
right,
licensed to do that?
right now, California and Washington, um, I've personally passed the test to be able to be licensed in 40 states.
Mm-hmm.
Each state, and this is another part of the bureaucracy, each state has its own
Mm-hmm.
guidelines for licensing. And so Washington required a 1 hour continuing education and a couple $100. So every state is, I could probably spend on all 40 states 50 grand to be licensed in all 40
Oh
states.
wow.
And each, that's for me as a MLO. And then I have to know each state's guidelines. For instance, I found out, I know the law says that, Dodd-Frank's federal, but it gave the states the power to regulate and to set their own
Right.
guidelines for seller
Mm-hmm.
financing and everything else. So every state has its own set of rules. And I just found out in Tennessee that there is no exemption for anything, not even where an investor is a buyer with seller
Holy
financing.
cow, that's bad
So,
news.
and yeah, and so some states are that
didn't
way,
didn't
or it's
Colorado
variations.
do that too? They came down harder on seller financing even than the federal.
I think so, but you know what? It's going to take research on every single
Yeah.
scenario, every single deal to find out. And that's where the consumer is just really put out to lunch. Like, how do they know if they're buying, if buying a note or creating one or whatever they're doing, if they're compliant without some real good knowledge, at least from an attorney or an
Well,
MLO that knows
I
what they're
know.
talking
Well,
about.
you know what? Attorneys are not made of the same stuff. No two are alike. Just because you got that ESQ on
Right,
the back of your name doesn't mean you know anything. Same thing with
right,
mortgage or real estate brokers, right? So
Right.
it's a huge
exactly.
thing. It's a lot of liability for you and a lot of investment. But you're so far California and Washington. Are there any other states where if someone called you up and say, like, oh, wait,
Yeah,
put
we've
you on the
we've
list
done
for wasn't it Florida too? Didn't you tell me?
Yeah, we got Florida soon, and then we've got Arizona, Colorado, and New Mexico, and then we're looking at other states. And basically, the way we've agreed to handle it going forward is if because we get calls every day, and we need to make sure the investor is serious, and it's a state where we can do more than one transaction a year there, then we would entertain
Right. So if somebody
finalizing
said, "Hey,
licensing and
I'm
do
in
their deal.
Nevada," or I said, "Hey, I'm in Nevada. I am in Nevada," but I've got 30 deals that I'll commit to you. It's worth for you to like pick it up and do all that that you have to.
Yeah, I mean, we can do the processing. We can do the processing nationally if they have their own mortgage loan originator, and that's probably ultimately the direction it'll go in, is a network of
Well, that
mortgage loan
actually
originators
makes
that do
that
it in compliance.
Speaking of Bob Zachmeyer at his event in Tucson, there was a gal there that does mortgages there in Arizona, and she says, well,
Right.
I can do, my company will let us, do this Dodd-Frank thing, and I don't have to be licensed, but this national umbrella of a company, there's 20 states where, I could hook you up with something. So, I mean, that was only the second person after you that I'd heard the company is at least broadcasting that they will do it. Because here, you guys know this, but for the people listening, that it's the most ridiculous thing, like in the forums and in the webinars and all these things, people talking about, oh, Dodd-Frank and what you should do and what you shouldn't do, and they're like, well, just get an MLO. And that was like, oh, you're the big man. Now just go find me someone who will agree to underwrite these things
Yeah.
when, as you pointed out, the CFPB is untouchable. They account. They're probably going to be like a federal mafia branch of some sort. But that you know
Probably.
what, they're not going to have to make sense. They're not going to have to defend themselves.
Right.
They don't even know. They haven't even published all. There's so many inconsistencies and things that are ambiguous. So for someone like you guys or any of these mortgage people to take on that sort of uncertainty and the heavy-handedness with which I think it won't be just a hand slapping. This could be very serious. So you haven't been able, like for 2-3 years, people who just flippantly said, "Oh, we got this solved. Just get an MLO." Well, try to find one that'll do it. That was the
Right.
thing. But now you guys and just this one other gal that I met there, her company is starting to say, "Okay, we'll do it. At least we'll underwrite the file according to these ability to pay guidelines, at least proving income and things like that." But
Yeah.
I don't know. So, wow.
We need E&O insurance. I would say if anyone out there is using an MLO, you need to make sure that the errors and omissions covers the transaction.
Oh,
Yeah.
yeah, definitely. Are they starting to? Is anyone underwriting this? Insurance companies?
Lloyd's of London, Jim Eckley referred us to somebody that Lloyd's of London will insure it, and basically I think, and I have to defer because I don't know insurance that well, that basically if it's a legal transaction, that it's going to be covered. You just have to have it. It's all mortgage companies, generally speaking,
Oh,
have
okay. So
insurance,
as
but
long as they won't exclude it, but it's just considered a legal transaction.
yeah, it should be. Now I've interviewed mortgage companies. Maybe it was a year ago, and it was too soon. Trying to get a national network from just one
Right.
entity, and the mortgage companies that typically make a lot more money than what we're talking about for making a deal compliant.
Right.
That one or 2 points or some yield spread premium behind
Right.
it or
Right.
whatever. I've been told that it's too risky for them, and they're just not interested because the revenue stream isn't
Yeah,
worthwhile.
exactly. That's
So
why there's big holes, just like there's holes in financing, there's holes in dealing with Dodd-Frank, right? It's
Right.
It's just like why
Exactly.
they won't lend to people 50,000 or less, or in certain markets. So it's very sad and frustrating. But let's not. I try to be positive. I should try to be positive. But anyway, what else? Okay.
There's one thing that I would like to bring up that is real important for the people out there. You could have a transaction that is completely compliant. Let's say we haven't talked about the exemptions, but let's just say in California, there's the one exemption for 12 months for anybody that owns a home or they have it in a trust or an estate.
Right.
And they can write a loan with a balloon. It's like a free
Right.
pass. You can do
Exactly.
anything you want.
Uh huh.
And that's kind of your market niche.
Uh huh.
What what and I know you and I have talked about this, I think about a month ago. One of the things about the forms that are in California is when you go to resell this note later, let's just say you're not the buyer, Don,
Right.
you don't know it, you don't know how it was created.
Mm-hmm.
If the seller that's holding this note, that's now the note holder, can't prove that the transaction was exempt, then potentially a note buyer is going to heavily discount it because they don't have this tangible thing behind them. And we've actually have through Jim Eckley's office a document. I think it's 4 or 5 pages that where the buyer is going to say that he's either a consumer or he's an investor, and it's in writing. It goes in the loan package, and that's your like first document for the whole thing. So that 10 years from now or 5 or whenever potentially that seller wants to sell the note, there's a document in there that's signed by the buyer that says that they're a consumer, and then they can prove that the transaction was exempt. And that's really important. The law doesn't have anything like that in it.
Yeah. That way they.
And it should be used on both sides too, Terry.
Pardon me?
It should be used regardless of whether you're exempt or not exempt.
Right.
It really covers your tracks whether you go left or you go right.
Oh, so this document says we acknowledge that we're subject to Dodd-Frank, and here's how we. Well, that's what you guys do is you underwrite the file and say, hey, we've done all these things, or yeah. So well, that's interesting. That's an interesting thought. I mean, it's just so hard to get your head around that you might actually have to really, really think about it instead of just let the government do their yaya thing. But
Yeah.
So you're saying maybe within 5, maybe it's not like this second affecting note sales, but what if down the road this person should have at least had this disclosure that you said Jim Eckley helped you guys put it together?
Yeah, he actually created it because he's. I mean, I've read the law several times, but I'm not an attorney, and for the first time in my life, I've read a piece of legislation and all the stuff that the symbols and all the stuff, and tried to understand it. And he picks out, obviously because he's in that space, he picks out stuff and he says, well, this is what you need for this, and he'll even go, like if we're going to go into North Carolina, an investor wants to sell some homes there. Each individual state has different deeds that have certain writing in them. You can't just take them off the title company website and say this is good for the whole country.
Right.
And so we really rely heavily on Jim, if in this going forward, because it's imperative that this security for all this money is really protected.
Yeah, well, good.
And at the same time, he's been in the space since the 80s. He actually appeared before the Supreme Court in the De La Cuesta case. So, I mean, when we talk about Back to the Future, and we jokingly talk about that being in this space, I'm sure you get the reference as well. That's, he was there.
Yeah.
So, and he's been there.
So
yeah,
then,
yeah.
I can hear people asking, so, well, how do I get that document? Like, if I am a seller How do I get that and put that as part of my package? Does he just do it by people hire him,
Yeah,
or?
that's a freebie, and we have it on our website, and people can
Oh,
download it.
you have it there. Well, let's go to your website right now. That's a good time to go. Just pull it up.
I think we have it on a direct Dodd-FrankNotes.com.
Seller
Otherwise, you can get it through
finance.
the Otherwise, you can get through the download section.
Sellerfinanceconsultants.com. You guys have a
And
different
if you
look.
go to downloads,
Yeah, you have a different look. Let's see, downloads right up here. Downloads and resources. And you guys, anyone on here should just go and say hi to these guys. Or do you have your in the front? You have a newsletter or something. You're having people sign up. I don't know.
yeah, up at the top, but they don't get you have to specifically enter for if you want the download.
See the little
that will get you
there,
into the
downloads and resources. It's the second one to the right on the bottom, where the little man is with his cell phone.
This one?
I think that's it. Yeah.
Oh, okay, so I click on that. Sign up to download the first Dodd-Frank seller disclosure sign up. I think you get an award for having the first Dodd-Frank seller finance disclosure. Nothing's happening. Oh, wait, because I need to put my name in here.
Yeah, they will have you trapped.
And you'll have me.
It's
you'll
the
have
one
me in your grips. Okay.
That's the wrong one. There's
Oh.
one down below
Oops.
there.
Now don't email me 10 times.
There you go.
Okay, just get.
Okay.
Hey, that's a great.
we send
hey,
out
that's a great...
we send out a message once or twice a month. We hate that too when people do that.
Well, no. Well, this is a very valuable ethical bribe in exchange for an email. I think this is worth it all day long. So anyone who's watching this, and I'll actually put a link right to it so people can just do it. But
and there's some other downloads on the left that are relevant to Dodd-Frank as well.
Okay.
Just some unraveling myths and stuff that if you want to read more about it.
This is very cool. So is that one disclosure in here? No, that's exemptions.
No, I think it's on its own. I think you have to go to your email to get it.
Yeah, we're in the process of revising the website, just like the law. One thing to add, Dawn, as long as we're talking about things that people were not aware of, we actually were at one of the local note meetups over the late summer, I want to say, and one of the investors was saying, well, here's how and believe it or not, there's people out there that talk about how to get around Dodd-Frank, and
yeah, I hang out with those people a lot.
and yeah, so this guy was saying that when you buy a note, because technically if you buy a note that was originated before January 10th of this year, technically it's exempt. Right. So you don't have to worry about Dodd-Frank disclosures. But, as you know, in the distressed space, people buy notes, and they're buying notes today, which obviously would be after the fact, and their argument is that it's not subject to Dodd-Frank, which they are correct, Part A. But then they go and modify the loan,
yeah, all these
and
non-performing
by definition,
guys, right?
you're providing credit. So everyone caught on this summer that, okay, well, if you're modifying a note, then you're providing credit, so therefore now you got to be compliant. Well, incredulously, there was a group that are telling people, well, just call it a forbearance. And, it's like saying, well, we can call a duck a hawk, and, therefore no, it doesn't work that way. If you're touching a note in any way, shape, or form, and it's the recipient is a consumer, as they typically are when people are buying, NPNs, as they like to call them, the acronym, which stands for non-performing note. If you're touching the terms after January 10th, which obviously we are here and now and going forward, you're subject to Dodd-Frank.
Yeah.
So it's interesting because these are supposedly gurus that are telling people essentially to break the law.
Well, what if the law is
It's
illegal?
a weird world
What
we're
if
in.
the law is illegal? It's unconstitutional. So is the CFPB. So is the Federal
I
Reserve.
don't disagree with that.
No,
Yep,
no one's
I
going to
don't
argue.
disagree with that.
Neither of us are arguing you on
No,
that.
but I get what you're saying. It's a pretty touchy thing because nobody knows. Hey, well, maybe we'll just all get Ebola and nobody will care, about this. But really, nobody knows
Yeah.
how big of a deal this is going to be. And I think you're coming down on the side, you and Jim and other like-minded people are like, better be safe than sorry. Now, and I think you guys, and I brought up this download page. That's awesome. Look at all the stuff I can download from this page, so people will know how to do that.
The top one is the one that we're looking
Okay,
for.
that's a great thing. So thank you for providing that. I hope my email is worth something to you down the road. But anyhow, so the cost then. So let's go over the cost. Like, I know it's on your website, but it's expensive, like it has to be, because you're taking on a lot of work, number one, and a lot of risks. So how are you guys making that sensible in your company?
Well, it's brand new, so we're trying to be consumer oriented and understand that it's going from zero to, in our case, we're charging $2,000 for this,
So $2,000.
and $495
Okay, go ahead. Sorry.
for the processing. Yeah, and $495 for the processing. Now, if in flyover country like Tennessee or Louisiana or whatever, someone could hire a mortgage loan originator, and we can just process the loan and make it compliant for the $495, and maybe that. In Louisiana, it's a $20,000 mortgage, which $2,000 is a lot of money.
Right.
They can have someone do it for whatever fee they charge, and we can partner up with that mortgage company in that state.
I like that.
So we're flexible. And the whole thought behind, I mean, we're not going to get rich off of this by any stretch. But the thought behind it is I would really like to create a pool of notes that are compliant,
right,
or be a company or that the securitization of loans under 100,000 is gone. So why I think being forward looking, there's probably going to be a huge space where these seller created notes are going to be floating around, and it's going to be a securitized market on its own, where yourself and the people on the call, are going to, this is how they're going to invest in their IRAs and things. And it's better than the stock market, and it's better than bonds.
right.
And so we're being forward looking, and that's where we want to be. And so I don't know if it'll work or not, but we'll see.
Well, I think it's a reasonable thing. But to me, the consulting has always been it's almost sometimes a lost leader, not exactly, but into relationships
Right.
with people. And what I want is the notes down the road, either from my own portfolio or
Right.
to once in a while broker to someone who I know this is exactly what they're looking for or whatever. So that, to me, looking forward to making something that's there, having the relationship, and then you seems to me you guys could capitalize on that pretty well. It's just there's a lot of uncertainty, but I appreciate your transparency and your honesty, and I totally get why you're doing it. And I'm glad somebody's doing this, because didn't you say at Noteworthy, like, you were just like flabbergasted that so few people were conversant, just in the basics?
It was so amazing, and however it's come a long way. It was a conversation in every breakout session. Last year, Jack Sternberg called me out in one of the classes because I had talked to him a little bit about what we were doing, and that was the only time I ever heard it come up. And I'm going, gosh, this law is going to be in effect in 3 months. What are people thinking?
Right.
And so at least it's like maybe when somebody dies, it's disbelief, and then it's like,
denial.
we can get around it.
Anger.
Yeah, denial, and then acceptance. And I think we're moving towards acceptance. I don't think it's there yet.
Yeah.
So anyway,
Yeah, I'm having a hard time getting out of the anger and denial part, but I am willing to go to some therapy, have some facilitation, and all of that.
New Year's
Yeah,
resolution.
exactly. For 2015, I will try to be compliant. Not a, I have never really been a good at drawing inside the lines kind of person, but yeah. But I think it's super important. So I'm. Let's see. We got to wrap up. My goodness, it goes so fast when you're having fun. But all right. So
yeah.
you guys experience what you do. You're hooked up at the highest levels. I think of anyone I've talked to, there's only a couple, maybe two, three people that are very aware and conversant and up to date. Um, what else do you want us to know? I'm really glad you're here. So let's see. California, we have those your states that you're doing business in. Um, we got your website up there. Is there anything that I've forgotten to bring out of this conversation? Something you want to leave people with?
Um, just one, two words: crowdfunding.
Crowdfunding.
It's a whole yeah, it's a whole nother conversation, but I think that's something that everybody's going to be very interested in moving forward into 2015.
Is that? I mean, somebody else just forwarded me something on that, and I've kind of been waiting for it to come online because I think it's an excellent solution. But they isn't the SEC been throwing up roadblocks all about that? What's happening with crowdfunding?
It was a big subject at Noteworthy, and I, the conversation was in 2015, just like Dodd-Frank was postponed a year because it was supposed to be implemented in 2013. This SEC law for non-accredited
Uh
investors
huh.
is going to come down in 2015.
So, like, any guesses when?
So no, there was no guess, but it's inevitable, and
Well,
I think that's going to turn
they've
things.
messed up all the other liquidity for us, so they better figure out something to keep money moving around the
Yeah,
economy.
I think, and I think this will be big.
It will be big. So people that have never heard of crowdfunding, do you have any other, like, Google this? I know Kickstarter, and all. There's several platforms for this kind of funding.
Real, yeah, uh, Realty Mogul. I just was on the other day. Um, you basically log in as if you're an accredited investor because that's the only way to do it
Mm-hmm.
now. Which means you have to have a net worth of like $1 million or
Right.
so, and 200,000 a year income. And if I guess if you put anything less than that, you won't be accepted into
Right.
that
But they don't make
website.
you prove it though.
They say that they may make you prove it, but they let you have access to their deals, um, without proving it. So it's interesting, and I think it's a way that a lot of people, and with small amounts of money, when it becomes non-accredited, will be able to invest in debt, in notes or debt, with maybe $1,000 increments or something like that in their own neighborhood,
Well, I know that's
and that's going to that's going to securitize the little guys.
exactly, exactly. So
So
this isn't having to do directly with Dodd-Frank, but just an exciting thing that's on the horizon.
I think so.
Yeah.
So some
Yeah.
answer to give an answer to your question, I really think in 2015, and I've certainly heard this being echoed by people all around us, that seller finance strategies as an investment are going to come back. You have people out there that avoided short sale or avoided, and now they're sitting around and they've got 10% equity,
Yeah.
whatever, and the money is not available for
Right.
lending, and probably won't be with the advent of and the arrival of Dodd-Frank this year. Our real estate market peaked out 2 months ago in San Diego, and you can see, and there's argument to show it's actually on a downward spiral. And this whole our conversation is not about metrics or anything like that, but the question is, will more and more investors it's amazing how many out there are still trying to do the whole fix and flip, and and it's like a whole bunch of clowns trying to jump into the same car, and you remember that scene, going to the circus when you're a kid,
Yeah.
and and it's still happening, and everyone's out there trying to wholesale. What about looking at this opportunity here and now to help those people? We're going to have a whole slew of people that are going to come back into the market. Terry and I can't help all of them, and you can't help all of them, and certainly your subscribers that are on listening are looking for ideas going forward. And I think they're here now. What about helping people avoid a short sale and make a few bucks on, and instead of looking at it from this pirate's creed, well, fix and flip and maximize our profit. What about helping someone avoid a short sale? You make a few bucks. We're not afraid to, you can, there's resources out there like you and us to help them, certainly do this when they find someone in the need. And I think the reality sunk in that, no, your house is not going to gain another $100,000 in value. It's maxed out. And, the question is, would you like to avoid a short sale now, or do you want to stay in your sinking ship? And it's the dog is dead. You want to keep feeding the dead dog, or I guess animal rights activists might have a problem with that. I'm not
I don't
agreeing
want
them,
PETA knocking on my door, so you just watch it.
but when the goldfish dies, you don't keep putting food in there. So let's give you a solution, Mr. Homeowner. Let's help you avoid short sales, and still make a profit on it. And everyone wins.
By having them leave, by doing a subject to wrap kind of idea, right? Leave the exactly,
absolutely,
exactly. I mean, there's just a guy, and we got to go. I keep saying that, but I mean, I'm on walking my dog, and I think I brought this up on my last call or whatever. But these people said, hey, I keep meeting them, and now they said, at the end of the month, whether we sell our house or not, we're moving to Arizona. We're sick of the winter. Of course, I'm going, maybe this winter is going to be colder than I expect. But, they're upside down in their house, and it's maybe a mile from my house here. And I go, you guys really should do some sort of owner carry solution. There's several ways to structure that. And they go, well, we're thinking about it, but we got a realtor now, so it'll probably work out. And I go, you know what? I'm going to let them sit a bit, because what I'd like to do with that is probably do a sandwich lease option so I can control that property. And then what if, some of my other family members get sane and decide to move out of LA, and I have a place for them to live. But that's the thing, where they're like probably 70 grand upside down, but they have excellent long-term financing, and they're going to have a guaranteed negative cash flow starting November 1.
Yes, they are.
Well, and here's the thing that I think you're going to experience. People say, well, if I lend you my credit, I'm not going to be able to buy again. Well, I'm glad you brought that up. I specialize in helping people buy without credit.
And they're moving to Tucson. I said, you got to check out Bob Zachmeyer.
Right.
There you go.
This is great. Well, Kathy typed in one question back when we were talking.
Sure.
Let's see. She says, are there any other additional concerns if you use your self-directed IRA as the bank? In terms of Dodd-Frank, I'm pretty sure is what she meant. So what do you have to say about that?
Sure.
It's a normal transaction. If you're using your IRA to sell a property or to buy one, it would be to sell, because you can't be a consumer inside of an IRA. Then it's just make sure it's compliant as the seller, because the test is to the buyer. Is the buyer a consumer, or is the buyer an investor?
Right.
And then what are the state laws? So that's where the test is. And you don't want a non-compliant transaction as a seller that the home is in the IRA.
Right, because it may not blow up the tax-deferred nature of the qualified account, but it sure could create legal problems or a huge loss. So, I mean, it's really the same in or out of a qualified
attorneys.
account.
Yeah, you don't want attorney's fees inside an IRA. It'll eat it up.
Yeah,
So.
I don't want them outside an IRA either. Do you?
No.
Does anyone want
No.
attorney's fees on any side of any? Anyway, you guys,
No.
thank you so much.
That was kind of stupid, wasn't it?
No.
Yeah, it was our
Hey,
pleasure.
you know what? You just set me up to make fun of you, so thank you for sacrificing yourself so I could sound funny. But anyway, thank you so much on short notice for filling in for me for this month. I'm excited to just stay in touch and see how we can help each other and everyone else around us sort of navigate this really interesting road that we're going down. So thanks again for all that you're doing and for your time today. I really appreciate it. And thank you for those who joined me today.
Thanks for having.
Appreciate you tuning in as well. What were you guys going to say? Sorry.
I was just going to say that thanks for having us on.
Yeah, our pleasure.
Thanks, Mark, Terry. We'll talk
Alrighty.
again soon.
Yep.
Take care now. Everyone have a good night.
Bye-bye.
Bye-bye.